From the beginning, we knew that we had to make a system highly visible so that as a trader you could see the entry and exit points and other aspects of trading. Market equilibrium drives things to the middle, and because of that you have repeat historical data that based on certain things repeated themselves, and this is what the reaction you had. And so with high probability we then can identify those things that repeat themselves and share them with you. This video is about interpretation. And I'm going to switch over to the charts now, and on the charts I've got I started out, I found this vertical red line on this symbol. It's RARE, and this happens to be December 16th, 2015. No, I said that wrong. December 30th, 2015. And I grabbed this spot, or I saw this because it had a really strong downtrend. It goes from about $116 down to $99 in 3 days or 4 days. And so I thought I'd start there, and then there was just more and more information, and so I've got a number of vertical lines drawn in here that show us different things. The first thing I'm going to show you, however, is I was going to show you what these 4 lines were here, but I want to show you one other thing first. And that is between this white line that we see here and the other white line that we see over here. And that we've basically got an area of divergence. We have the trend red that's at a peak, and it goes down to the bottom before it does a uptick in a downtrend, or what appears to be a downtrend, at least if you're looking at the red trend line. Because you have, at this point right here, in between the vertical red and the vertical white line, you have a lower high. And the definition of a downtrend is a series of lower highs. You actually have one right here also that is a lower high, and this one is lower than that. So we basically have 3 points that establish a downtrend. But our price is going up. And so this is more than likely a hedge fund or a strong investor that is doing this, but it's hard to say. In any case, just for reference, if you look down here on the swing chart, you can see the swing gray. And the swing gray is a deep cycle reversal indicator. And if you haven't seen it on the videos, you can go to the documents file, and we have it in another place too, but you can go to the documents file and you can copy the indicator line definitions, and which basically tell you give you a description of how that line reacts. For example, the zip green line is actually a line that tracks exchange trades in and out of the market. And the corresponding line that's paired with that is the zip Zion line. and that basically tracks tracks the trades that go on at the exchanges, but it has with a power stimulator. And so those two are, I just brought them up for reference, but I wanted you to know that. All right, now we've had this significant downtrend, but prior to that we had this divergence period, and the trend red indicator line says that we are in a downtrend, and so that's one of the aspects of trend red. And trend red is a high-low impact indicator. It reacts pretty fast for different things, and so as a result of that, it's still above zero all of this time, but it's soon going to go below zero, and when it goes below zero, then we obviously see what occurs. It's just like over here. When it goes below zero, things go down, typically. Now, that being said, I want to share one thing with you, because on this white line here in between the red and the cyan vertical line, it's at that point that we have our lowest trend red. The trend red has actually down touched zero. Trend green, which normally down touches the pink, is slightly under the pink. But because red is hitting zero, or even maybe if it went on a little bit under, it would be a fine reversal pattern. We see this happening all the time, and that's when you look at this, you're going to go, well, wait a minute, why would you say that's a reversal pattern when you have the trend trio, blue, pink, and yellow, that have actually turned and gone down, and they're in a downtrend? Because your cyan line, vertical line right here, is the point at which those three have turned down. And so we know that we're in a downtrend. But if you look at the swing red and green and blue, you're in an uptrend on this vertical white line. If you go over here, you're also in an uptrend. The power green and orange tells us that we're in a decent uptrend. And the power green and orange are your best long-term indicators, and the swing red and green are really close behind that. That indicates, when they're going up, they're going up, and that defines an uptrend. Your trend lines, blue, pink, and yellow, they are a medium-term. Well, here by definition, I guess I call them a medium trend indicator. They'll change before the others will change. The other two wide line sets will change. But in any case, at this point of the white vertical line, we only have two things that I can see that would say or maybe three things. We got the red, trend red down touching the zero, and that's actually at 2.8. And so the other thing that we have is the trend gray, and you can just barely see it probably here on the video, but the trend gray is going up, and trend gray is a divergence recognition indicator, and it oftentimes identifies divergence. And so that's going up. Over here in the power chart, let me expand this. We've got a real easy and obvious upturn on this white line, which is the same line on the other chart, and that is in your power Zion. We've got a low angle down, and it's actually a lower right leg, so it's going to go up. And actually from today's close on that white line at 113.26, and then the next green line on the right of that, that's at 116.48. So that goes up about $3 the next day, which is a real nice move. But that being said, the area of our identifying the next day movement on this vertical white line definitely appears to be up from all indications that that we see. Oh, there is one other thing here. We do have what, and this is a real good indicator, we do have a swing pink in a high M pattern, only what's obvious? It's real low. It's way down there by zero. It's under swing red and green. And this pattern, actually it's a 2-day down here. You had a high M that took place on the Scion vertical line, and then 2 days later it's way down. It's almost even with this day over here on the when it first went down. That right there, it actually, if you look at it and think about it, it's a W pattern with a high M in the middle. And so it basically is a reversal pattern, and it goes back up. But there are a number of things, or one of the primary things that drives us, or that motivates us to think of it along those lines, and that is, even though our trend red was going down, and we were in theory in a downtrend, I mean, it's recording some pressures there that say it's going down, even though the price was held up by whatever means it was. Somebody had a lot of desire to buy it because the price just continues to rise. But that's reflected down here in the swing gray. It clearly shows that things are going up. And when you get one of the things that happens when you get swing gray, for example, I'm going to share one thing with you. When it's above, when it's above zero, and you have a bottom of cycle movement, a bottom of cycle move, and that would be this white vertical line moving over right next to the red. So on this day, it opens up. You're contemplating making a move on this stock, and it opens up higher. And typical to candle activity theory, green line, a green candle that day, if it ends up being a green candle that day, it's going to open up, go down, then go up to the top, and then come down and build that upper tail that we see typically on a green candle. But you could set this. You could set a swing gray bottom of cycle above the swing red on a scanner, and you could, at 1 minute after the market hit, you could punch that scan in to run automatically, and in a couple of minutes it'll spit out any of those stocks that are up high, basically above the swing red, and they're in a bottom of cycle pattern, which is, to have a BOC on a peak, that's highly unusual. And it's also a BOC higher, which happens often. I don't know why that happens on a peak, but it does. But what I'm saying is, you can trade this because 3, 4, 5 minutes after the open, you've picked up this swing gray indicator showing that this stock is doing that. and as a result of that, it's going to be nice. You're going to have a nice ability to trade green. And and now, don't think that when it opens and the candle goes down that this line is going to go down, because that's not the case. It gapped up. When it gapped up, that sets the line, that establishes the line direction almost all the time for the line. That's in almost any line you see. And so that line's going to remain up. That BOC, it may not have been a BOC higher immediately, but it definitely would have been a bottom of cycle 1 minute after the open. So it's kind of easy. I mean, it may not be easy, but it's as you listen to these videos, it will become more easy for you to see how these things happen, or how these things can be properly interpreted. And then, of course, on the day when the vertical red line is there, we then have a top of cycle in the swing gray line. And this is the swing gray, like I said, is a deep cycle reversal indicator, and it's one of the few lines. I mean, even the trend blue, pink, and yellow turned down after this vertical cyan line, but the gray line continued to go up, and it's just establishing that deep cycle aspect to its price relationship. And so the swing gray line is a pretty valuable line. Now, I want to share with you these next few lines so we have some kind of thing to work off of. The vertical pink line is the line where down here in the swing chart, the separation between the swing red and the swing green is actually at its narrowest point on that line. From here over on the left, the red and the green generally just got closer together all the way through here. After the pink line, the red and green spread got larger and larger all the time, indicative of a downtrend on this side and an uptrend on that side. And obviously, again, we have a consolidation period, so that didn't occur. That's generally what happens. The yellow line right here is when the trend trio, yellow, pink, and blue, crossed over zero. So that's also indicative of going into an uptrend. Even though on the next day it went down, but that was obviously seen as in the high M on the trend red here on the yellow line, on the yellow vertical line. Keep in mind, the trend yellow, pink, and blue are your medium-term trend indicators. The green line is, the green vertical line is when the swing green turns up, because swing green was going up and then it went down, and now at this point it has turned back up. And so obviously looking at it, it is really tiny in its climb, but it continues to go up. And that's one of the things that we're identifying with all of these vertical lines. The white line over here it's actually a trend red up with a red candle. That's one scan that we use to identify the bottom of a cycle. Because if trend red, excuse me, if trend red is going to start up and it's still going to have a red candle, then next day should turn green and it should go up, as it did in this case. The opposite of that is right over here. Let me move this line. You have this white line next to the red vertical line right over here. We have a trend red down with a green candle, and that tells us that the next day it's going to be up. Keep in mind when you're trading, I'm not trading, I don't, like over here on this white candle, I don't trade on that candle and then assume that it's going to be just fine for the next several days. As a day trader, we buy the open, or buy somewhere near the open, and at the end of the day we're out, and we'll do it again the next day. We're in and out. Sometimes you know, I mean, I've made my fair share of swing trades holding it overnight, but you know, in my heart I'm a day trader, and so some people would just hold this until they get a sell signal, which obviously comes on this this green day. Well, actually it comes down here. You've got a low angle up on the swing cyan color, which tells you likely to be going down tomorrow. So I would have sold at the end of this day, which would have been basically the peak of the 4 green candle days. And I haven't even looked over at the other side, but there could have been several other indicators over on the other side as well. The reason I bring this, or I share these lines with you, is because we're in a consolidation period, but we have the white line, the green line, the yellow line, and the pink line, which have all told us that we're going into an uptrend. The pink line, I think I may not have mentioned, but let me bring that up. The pink line has several of the indicators in a high right leg W, and that's why you literally have this huge green candle, which is 94 to 104, went up 10 bucks. So there are many aspects of identifying what's happening the next day with these individual indicator lines. Now, that gets me to these 3 red candles over here, or red vertical lines over here. The red vertical line on the left is when the swing blue line is in a top of cycle and it's going down. So that's the first turning point of the blue and the red indicator line. I think I may have said that wrong. This is the blue line in a TOC, top of cycle, so it's coming down. The middle red line is when the blue line crosses under the red line, and the right red vertical line is when the swing red line does a top of cycle. In other words, it turns down. And so you've got 3 distinctive indications that you know, when you have a blue line cross the red and the red line turns down, you obviously are going into a downtrend. Now, that being said, again, we're obviously in a consolidation period, and there's a lot of different stuff happening inside of this, and that's why I wanted to show you this area. Just to compare, if you go over here to this vertical red line, on this day, the blue line did a top of cycle move. It did a TOC. It also did a swing blue cross under swing red, and the swing red is in a TOC pattern. So you have all 3 of these things that took place over here with these 3 red vertical lines. They have now occurred on the same day over here, and that shows you strength. That shows you power. That shows you the start of a much stronger downtrend here than you had over here with these 3 lines. Now, oftentimes you just get the 2 oftentimes the blue goes down, and then in an indication of a strong downtrend is when the blue crosses under the red and the red goes down. So that would happen more often than all three of them on the same day. Excuse me. So it's interesting to see that you can detect strength of a trend before the trend even occurs. The other thing that is quite obvious if you haven't seen it, and that is your swing gray has now done a TOC. So your swing gray, which is your deep cycle reversal indicator, that has turned to the point in which it is going down, and so that would be the start of a downtrend. Now, let me go over here to well, here, I want to point out one other thing before I do that, and that is, if I go to this left vertical red line over here on this part right over here, and I look at the data chart for it, it tells me that the swing red is at 1.77 and the swing green is at minus 1.9. So basically that is a separation of to 3.76. So the distance between the red line and the green line on this left red vertical line is 3.76. Now, that's probably where they have the widest separation. Now, over here on the pink line, where we have the red-green spread as the most narrow point, we look at the information there, and it shows us that the swing red is 0.12 and the swing green is minus 0.24. So it's basically a 0.36 spread. Now that's over here we had 3.7 to 0.36. That's literally 10 times the difference. And I don't know why it happens, but there are a number of times that around the factor of 10, this one here is much closer than, I mean, I've seen them, you know, different than that, but this one is very close to that 10 factor. And I have no idea why that occurs. But, and really, you're not going to know that this is the most narrow point of the line until the next day. However, what you can see is you've got, you know, there's literally 5 higher right leg W's just in the swing chart. Cyan, yellow, blue, and gray are all in high right leg W patterns. And the trend red up here is in a high right leg W pattern. And I'm sure there's several over on the other side. But from that, we know that next day it's going to go up, and so we know that if the price goes up, that narrow spread is going to go up, which then tells us that, you know, tomorrow it's going to be up. Tomorrow is the start of the uptrend. Tomorrow is the start of increased spread between the lines. And because to the right of the pink vertical line is an uptrend, and to the left was a downtrend. Even though we had a big battle, big bear bull battle, you know. So that's an interesting method to use, and it can be very effective if you follow it. We don't have a lot of concrete information that we've put on video yet, but I do need to point that out to you because it is critical and it shows you some critical turn of events. Because let's face it, 3 days after this happens, like, you know, in the middle between the pink and the white line, you're at the bottom. You're still in that consolidation period. In fact, excuse me. So in fact, let me draw a vertical, or excuse me, I want to draw a rectangle and kind of just show you what this is doing here. That blue box shows us that the consolidation period that we're in, and in fact, the next day, if I drag this thing one more, that green candle has gone above the box. And I draw this because there are a lot of people that will use channel breakouts, and they're very effective. And sometimes they use them with volume, and we don't use volume much in our indicators. Because there's just so much more effective methods to use. But if you don't have a real sophisticated system, channel breakouts make people money. But like anything else, you need to have a trade log. You need to when you make a trade, you need to mark it down, you need to mark all the information down, and you need to track yourself, because that information, as you look through it in the weeks and months ahead, will give you a lot of insight into what you're very successful at. And as you learn to do things more effectively, you'll become more successful at other key setups. But that basically identifies that consolidation period, and as you can see, it goes on a little bit farther. But I want to drop back and go over to this white line way over on the left side, and I want to show you, I want to drop this down a little bit. I want to show you that this is the point at which we have a swing gray up, we have a swing yellow, a low angle up, same with the swing Zion, but we have the swing pink down. And this alert or setup, or whatever you want to call it, right there, that setup is one of our top setups for identifying the top peak of a cycle. It's just the reverse on the bottom side, and many times you have gray up with swing yellow up and pink up, or some combination like that. But what this tells you, when you have the gray up and the swing yellow in a low angle up and the swing Zion in a low angle up, only the pink has gone down, it's not a big, it's not expected to be a big transaction. It just, if you had the yellow, Zion, and pink all down while the gray was going up, that would be a lot different. So again, it's recognizing the power in a move as you're looking at these lines. Now, excuse me. I did mention this previously, but I want to point out to you that this swing pink high M is a very powerful indicator for it going up. Now you could make the premise that, let me move this white line over here, you could make the premise that here's your high M that with your leg coming down, but and oftentimes that happens, or excuse me, if I move this back over, with the long pink 2-day leg. Oftentimes this leg occurs in 1 day, but in this particular case it occurred in 2 days. But when you have that high M pattern in the location that it's at, in other words right around 0, but especially under the red and green lines, that's just an indication that you've got like I indicated, a big W that's forming. And so hence you have that big green candle between the red vertical line and the white vertical line there. There is another high M over here, or in trend red there's a high M, and this one hits the dash 40 line. I've got the 40 positive and the 40 negative because it's just a quick reference point when you're looking at things, and things happen around the 40 mark on both 40 positive and 40 negative. So in this case here we have a higher right M that goes down and comes back down to where it is right here. And because we've identified that we're in a consolidation period, and we can see that you can say, well, at this point it's about the lowest it's going to go, and I do have other indicators that suggest that it's not going to move any lower. Whatever those might be, my point is that we're still in the middle of this consolidation period. A lot of people will tell you, don't mess around with consolidation periods, just find something else to invest your money into. But I'm here to tell you that you can make a significant amount of profit in a consolidation period. And it's like here, if I look at this, let me do it this way. If I take this yellow candle and I'll move it over to here, or yellow vertical line, move it over to here, that green line right there goes from a low of 93 to 101. It's an $8 increase. This green line right here goes from 95 to 101. That's a $6 increase. And this one over here, that goes from 92 to $100 and 84 cents. And so I guess what I'm trying to tell you, and that's why when I saw this consolidation period, I wanted to capture some information on, or give some information on consolidation areas to you, because it is a very interesting area to work. And you just have to go, remember, you trade 1 day at a time. You're looking at what's going to happen tomorrow, and you can go from there. And there's many different ways to find the next deal. The one thing that I do want to comment a little bit on here is I want to share with you about what I refer to as humps. And the humps are real visible in the trend chart. Obviously we have, here again I'm going to move this vertical line over to the low of the yellow, pink, blue hump, and then I'll leave that there, and then I'll move this yellow vertical line over to the low of next hump. Now notice that the yellow vertical line hump is higher than the blue. It's basically a right leg W higher in about a 6 or 7 day pattern. And we have the trend red in a right leg W with a low angle up extension. When we see that often, you got two things there. You've got a low angle up in your trend red, and you have a right leg W in the trend red. You put those two together, and what do you end up with? Next day, you have a $95 to $101 increase. And if you can gain $6 in, I mean, let's face it, if you had $100, you made $600 on that day, and if you had $1,000, you made $6,000 on that day. So the issue, or the thing that I'm trying to get here, is you have short-term, as a day trader, we're looking at short-term stuff, but don't forget to look at the long term of how you got to where you're at on that day. Don't forget to look behind you 2, 3, 4 weeks of trading, because there's a lot of power in this lower high right leg W trend trio pattern. Same is true on the other side. Or as we continue, we have a low hump. I'll mark it off with the yellow line here. We have a low hump in the yellow, pink, blue, and then on the pink line we have the second hump that's higher, and then in your theory of three, then you go back and you see right here at the cyan line, that's the third hump, which is highest, and you can talk about 3 candles or 3 this or 3 that. It usually is indicative of a reversal after the 3, and that is prevalent in almost any situation that you see with the theory of three. They're just, with the theory of three, you just unless you're experienced looking at them, you don't necessarily know what to do with the 3 items that you're seeing. But I want to move this blue box over to the next one and show you at this, and this is at where the pink line is right now, and that'll show us a continuation of the consolidation. And then just to kind of show you, if you're contemplating channel trading, this is the point. It's on this day right here at the end of this blue box that the green candle stays above the channel that we have in there, and so that's the first sign that we have a uptrend taking place, or a breakout taking place. And so either at the end of this day, which has a value of a close of 105.40, or at the open of this next day with the white line on it, white vertical line, that has a open of 106.60. So if you were going to do a breakout, you would catch it around 106 somewhere, and then on this last day over here, it goes up to closes at 116. So there's a $10 rise in all of those, provided you had the guts to stay in, and your whatever system you were using, you could deal with the strong downtrend here, especially on a couple of those red candle days. And obviously, if you move this over, you're up above the box, and you should be in the trade at that point. But I want to tell you that with this system, you can identify when your entry point should be, because I don't care if you've been looking at it every day since it opened, and in fact, excuse me, and in fact, I could move this thing back into here as to when that consolidation period started. But the key, I'm going to move this pink line and show you where the key is. And that key, even though this consolidation period, oh, I see what I did. When I pulled it over, I thought this thing would spread out, but it doesn't. Okay. Well, even when the key, or excuse me, the key that you see even before the breakout is right here on the pink vertical line. And I say that, and it's real obvious if you look at it like this in the trend chart. You've got a triple bottom. And that, not only do you have a triple bottom in trend red, if you look closely, you have a triple bottom in the swing Zion. Actually, the swing Zion is in a little bit of a head and shoulders, which is even a better thing. You also have a triple bottom in the zip red over here. And you have a triple bottom in the power yellow that comes through. Somewhat too in the power Zion, but I use yellow more for looking at this stuff, especially when it's started at the bottom and it's running near the bottom, because I have a tendency to use the lowest indicators. So the only other thing that I want to talk about here is on this vertical, I'm going to talk about a couple of other things, but it has to do with pink lowest. On this vertical pink day here, where we had this doji, and it was, hey, this is the breakout signal, we got the triple bottom. We also had what? On this pink vertical line over here with the doji in the zip chart, we have zip pink at the bottom, and if you look closely in the power Zion, we have a bottle nose at the bottom. And as you may have heard me say before, when the bottle nose is highest or lowest, it has more impact, has more power, and that's always reversal power. And so those two things give us, there's just a number of key indicators that tell us in this consolidation period that this could be our breakout point. And it's definitely worth following a bit, because there's just a number of key indicators at this point. The only other thing I want to comment about is, again, you've heard me in other videos, you know that when pink is the lowest, it always goes up. Okay? Now, we do have a couple of exception rules, but I want to point out right here where the pink vertical line is, we have a pink lowest. And it's supposed to go up. But pink lowest is above 50. And so one of the exceptions to a pink lowest pattern, because pink lowest is and pink highest are, they're in the top, brackets of either a top of cycle or bottom of cycle alert. But the pink lowest does not work when it's above 50. And so you've got the pink lowest right here at 59. And so that would be excluded. We're not going to make a trade on that because it's too high. The next day, we have a pink lowest at 37. And, excuse me, on that day, we've gone through the day. Now we're at a red candle, so we've gone down twice now. And that day is the same as this pink candle over here. Pink vertical line over here. And at this point here, we have a key line that's showing up. I'll expand this to show you. And this is on the trend gray. We are in a high M pattern. And that's going to tell us that it's going down tomorrow. We are also in a, which is much more obvious, we are in a trend red under trend green. And you know, when the trend red travels under the trend green, we are in a downtrend. And so there's nothing to expect on this day except that we think it's going to be going down. We also have a flat top in the swing gray, which tells us as we're going down. There's plenty of information here that tells us that the day after this pink candle, we're going to go down. And so the zip pink vertical line next day is going to be down, even though the rule for the lowest, when zip pink is lowest, it reverses and goes up. But we know it's going to go down at this day. Excuse me. And then this pink vertical line in the zip chart, we're now at that point where it goes back up, and so we're at the power Zion bottle nose, and we do have pink lowest, and we have the other stuff over here in the trend and swing chart. Okay, now my point in bringing this up is that you need to identify with how things are working. Oh, wait a minute. I see one other one. Over in this area right here, you have a pink. The first left red line in the pink chart right over here is a pink lowest. And so from a pink lowest rule, it's going to go up. But we have one exception to this. We have, or maybe more, but we at least have that information. We're coming off of a real high peak. We don't know for sure how it should be treated, but we do know that we have a real high zip yellow. And that zip yellow it tells us that, well, it should if we look at our basic red spike formula, again, the red spike is one of those key. The red spike and the red peak, again, are one of those key elements of a downturn, or depending on which way you're going. Okay, but because of this, we have so much information. Remember, these three red lines were telling us that we had 3 steps to a downturn in the heavier lines. This was the trend blue. This was the swing blue going down, and then it led to the swing blue cross over the red, and then it led to the. Okay, so we're in a downtrend mode, and the swing red has turned over in this process, and so it's what am I going to do? I think I should wait. Okay, because we're just in that area where you're fighting that trend aspect, and so then on the middle trend, on the middle red vertical line, pink is not the lowest. So there's not an alert. But then we hit the main next 1, 2, 3 days or so, and that would be starting at the right vertical red line. And at that point, we are lowest. But again, we have zip yellow high up, and we have that notation or thought process of this is the third day, the third alert of a downtrend. Swing red has now turned down. And then of course if you look at the 3 lines in the trend chart up over here, I mean everything is going down. And so basically what I'm saying is that you're in a downtrend when you have an alert that says it's going to reverse and go up. And when you have that strong movement, or when you have those strong long-term or medium-term indicators, trend indicators, you just don't want to fight that direction. It's just not worth it. It's, you find, you know, the trend is your friend is an old expression. Well, you need to keep it that way. And this area right in here with the low pink, it's just not the area to be investing in going up until you get the right signal. And a lot of things happen on the day after this white line. It turns green. Your power yellow and pink are deep cycle indicators as well, and both the power and the pink are going up, and so that's a very good indication that you're going into an uptrend. And so when that opens, when like here, when if I move this white vertical line, this is on this opening day, you are seeing, you know, whatever you're seeing at the open, but it's quickly going to move in a uptrend fashion. And you know, your power Zion has gone up, and especially your pink now has gone up. I mean, right away at the open, some of those lines are going to obviously be up, so you can recognize how you're going to be trading that day. So that pretty much explains a lot about, I'm sorry about the length of this video, but I really wanted to get some key information to you, because the how you interpret those lines and understanding the power of some lines over other lines, understanding the influence of what the long-term trend lines tell you, because if you're trying to go long in a downtrend, you are fighting a losing battle. The candle is not going to be strong. There's going to be very little volatility to it. And what are you trying to do? You're trying to find days in which you're going to have large candle movements. And you don't do that by having opposite conditions. And so really use the long-term lines to make your decision on what you buy. You'll be much more profitable in what you're doing, and not only that, you'll have a lot more fun doing this.